The stock market's been acting a little confused lately. Why do I say this? The stock and bond markets have been sending very mixed signals over the past 2 weeks. Some experts are saying we're in for a soft landing for the economy, while other experts are fearful of a hard landing. Here's what Cathie Wood had to say, and if you'd like to see the full version of her video, the link is in the pinned comments below.
To listen to the CEO of Citibank say that, wow, who could have seen this coming? And actually, you could see this coming. And we've been talking about it for a year. And we were also looking at the yield curve. So the yield curve inverted in July of last year and continued to invert. And so that's usually a signal that the economy is going to end up in trouble and that inflation and interest rates will come down fairly dramatically. And so that happened last July. Still, the Fed didn't pay any attention to it, it seems to us. Well, something did break. And we all know, of course, it was the regional banking system. And of course, in 2022, and over the course of just 1 year, interest rates went up 20-fold. Never happened before. 20-fold, up to 5%. And that was a shock to the banking system. And the rest is history in terms of the bank crisis and everything that we had to do around that. So now we come to this question of, okay, here we are now. What happens? Surely there have to be some ramifications, economic ramifications. But there is a hard landing possibility here as well.
Let's go through the metrics as we do every week and see how things look. So if we take a look at how the equity markets performed over the last week, you can see that we had somewhat of a healthy rally here. All of the indices ended up higher, with ARK leading the way. This is good. Small caps in second, S&P and Dow kind of third and fourth, and NASDAQ last. Now, NASDAQ has been performing really well over the last month or so maybe it's kind of taking a breather here. But if we look back over the past month, you can see that the NASDAQ, while it performed better than ARK and small caps, was beat out by the S&P and the Dow Industrials. This is okay, not great. But if we look back over the last 6 months, the NASDAQ is clearly leading the way higher here, followed by the Dow and the S&P 500. ARK is down here and small caps are at the bottom. So this is really kind of a mixed up rally we're seeing here. It's kind of interesting when we look at the bottom dynamics, because what we're seeing here is we had a bottom back here, and we've had kind of a nice rally here, nothing spectacular, but it is going higher. We almost had a bottom confirmation signal here, but the confidence level wasn't high enough. And now what's happening? Well, the bottom confirmation signal, this blue line, is dropping like crazy. The bottom forming indicator is going up like crazy. And the confidence level is going higher. And the market dropped this past Friday. So this doesn't look too good, at least in the short term. But let's see what the other metrics are telling us. And if we look at risk versus opportunity, this actually looks pretty decent, except for the fact that risk acceleration is shooting up higher here. Now, I won't become too concerned until this gets above, say, 50, 60 or 70, and then I'll start to worry. I like the fact that the risk level is below 80. This is good. And I like the fact that the opportunity level is moving higher. So nothing to really see here except that things are okay. And what if we look at equity versus safety? Well, back here we had a very healthy stock market and a healthy treasury market. And then treasuries started moving up higher. You can see EDV, the longest term treasuries, were ranked number 1. So there was a flight to safety, but equities held up reasonably well, with the NASDAQ 100 being ranked the best out of the equities and the Dow in third place. Now, small caps really weren't going anywhere here. But now where are we as of this past Friday? Well, this past Friday, if we look at it, yeah, equities are ranked 1, 2, and 3, but this is an unhealthy looking equity market with the Dow ranked number 1, S&P 500 number 2, and the NASDAQ 100 ranked number 3. I'd really like to see this flip the other way. And what else? We have gold ranked 4th, and then we have an unhealthy treasury market again, where the longest duration treasuries are ranked right at the bottom here. this doesn't look good right now. Although I like the fact that equities are ranked 1, 2, and 3. Hopefully the NASDAQ will begin to perform better in the coming weeks. And how does all of this show up in buying and selling pressure? Well, if we take a look at the Dow Jones Industrial Average, you can see that the buying pressure, this gray line, is above the selling pressure. Now, it seems to be collapsing here toward the end of last week, but the price movement has been nice. So we'll have to see where this goes into next week, but doesn't look terrible right now. What about the S&P 500? You can see that the buying pressure rose very nicely here as the S&P 500 rallied, but it has been falling for the last several weeks. So this doesn't look great right now. Not terrible, but not great. And what about the NASDAQ 100? Well, you can see a very nice rally here, although it's been kind of falling over the last week or so, couple of weeks maybe. And the buying pressure has been falling over the last couple of weeks, while the selling pressure has been increasing. This doesn't really look all that great for the NASDAQ 100 right now. And small caps have been kind of trying to rally, kind of going nowhere here. Buying pressure above the selling pressure, kind of trading places here. Not much really going on with small caps. And what about ARK Innovation? These are the riskiest assets. And you can see that they've had a really choppy ride here. Kind of started to rally and then have really been going sideways to maybe slightly up. But you can see that here in the buying and selling pressure, where they just keep trading places here. So this is really struggling, in my view. Now, what about sector rankings? These give a very different look to the market. Now, these move much more slowly than, for example, equity versus safety or the buying and selling pressure. But you can see here that Bitcoin is still ranked very highly, number one. Part of this is the bank problems that we saw over the past several weeks. And I think people recognize that blockchain worked flawlessly through the banking crisis. So I think that's one of the factors that drove Bitcoin and gold higher was the bank contagion. But we also have technology, innovation, ARK, emerging markets. These are all risk assets here, which are ranked very nicely near the top. We've got consumer discretionary way above consumer staples, and we have cash on the lower half of this table, although I'd like to see it even lower than this. So this perspective looks really pretty good. Nothing to worry about, right? Well, let's look at sector rank acceleration because these move faster. And you can see that gold is ranked number one. Yes, emerging markets are up here and innovation's up here. So maybe there's some hope. These are risk assets, at least emerging markets and innovation. Gold is a flight to safety. So I don't like the fact that it's ranked number one. We can see, what do we've got? Emerging companies, we've got small caps here. So they've been doing a little better, even though you can't really see it in their chart. And cash is down here, again, in the bottom half. I would, again, like to see this down here further. But I don't like the fact that consumer staples are doing better than consumer discretionary. So this is really a very mixed picture. If we look at Treasuries over the last week, you can see they've had a very unhealthy week, with the longest duration, highest risk Treasuries doing the worst, and the lower risk Treasuries doing the best. So this really doesn't look good. And that good old inverted yield curve, yep, we're still very inverted. Yes, we've come about halfway here. We were down 1.1% or 110 basis points inverted, but you can see we're still almost 60 basis points inverted. This needs to go up off the chart here to become uninverted. So still struggling here with the inverted yield curve. And when we look at Treasuries from a buying and selling pressure perspective, you can see the buying pressure was above the selling pressure, and then recently it's just collapsed, and the price movement has looked a little bit unhealthy here. And if we look at 7 to 10-year Treasuries, I call these intermediate to long Treasuries, you can see that selling pressure has really skyrocketed here as the price has declined. So there's an exit from longer-term Treasuries, at least in this duration bucket. And then when we look at long bonds, the 20-year Treasuries, TLT, you can see that selling pressure is moving higher very quickly here. Buying pressure is collapsing and the price is dropping. So that goes along with what I showed you, where the prices of the longer duration treasuries really dropped over this last week. And gold has been a flight to safety. You can see we've had a very nice rally here, although it is moderated. It's got a lower slope here than it did at the beginning. And you can see that the buying pressure has been declining over time, but it is still above the selling pressure. So we'll have to see how this plays out. And Bitcoin ranked number 1 in the sector rankings. You can see that Bitcoin has had a very nice rally here, and the buying pressure has been mostly above the selling pressure and is well above the selling pressure as of this last Friday. So where does all of this leave us? Well, after screaming risk on a couple of weeks ago, the stock market is looking tentative, weak, and somewhat directionless again. The yield curve is still stubbornly inverted, although when we look at it, it's rebounded about halfway from where it was just a few weeks ago. As you heard Cathie Wood mention, there is a fear of a hard landing in the economy, and hopefully the Fed will relent on their overzealous rate hikes soon before they cause even more damage. I'm Calvin Rose, and thank you for watching Invest Smarter this week. That's all for now.
Pour it out, if I'm being honest.